Welcome fellow traders and value investors to another video. Behind the scenes of Apple, railroads and entire power grids, there is one quiet compounding machine. Today we unpack Berkshire Hathaway. Why it's on my radar? Because it has a fortress balance sheet and it's a conglomerate. Insurance, railroad, Berkshire Hathaway Energy, plus dozens of other businesses and massive equity portfolio. And above all, Warren Buffett and the late Charlie Munger. Berkshire Hathaway is an American multinational conglomerate holding company headquartered in Omaha, Nebraska. Originally a textile manufacturer, the company transitioned into a conglomerate starting in 1965 under the management of Chairman and CEO Warren Buffett and Vice Chairman Charlie Munger. I'll start by saying that I was told current ratio and debt to equity are the two metrics Warren Buffett and Charlie used to use to analyze the management of a company, so that makes it more exciting to analyze this stock. And this is the reason I like to look at those two metrics. If we turn to the chart and we look at the financial, change to annual, we can see that Berkshire Hathaway has a P ratio of 1596. It has a very decent net margin of 32% and a current ratio of 589 and a debt to equity of 0.22. Warren Buffett and the late Charlie Munger lived to the standard. If we also look at the statement, change to the annual, we can see that Berkshire Hathaway has a pretty decent free cash flow of 19 billion. Balance sheet, the total debt is at 143 billions. One thing they have is a total asset portfolio of 400 billion, of which cash and cash equivalent of 47 billion and short-term treasuries and cash and short investment of 300 billions. They can basically pay their debt in full with just cash that they have on hand. If we turn to the 10Q and scroll down to the assets, we can see that Berkshire Hathaway has 300 billion in short-term US Treasury. This is a positive but also a negative because it's not very easy to deploy them once they mature. If we go further, we can see that the revenue is 94 billion, 95 billion for this quarter compared to 92 the same quarter last year, which is a 2% increase year over year. If we scroll down to the net earnings, we can see net earnings increase from 26 billion to over 30 billion, a solid 16% increase. All in all, a healthy earnings and a healthy balance sheet. Well-managed company and definitely a positive. We can see revenue growth, net earnings growth, and growth all around. Healthy balance sheet. Now, if we turn to my intrinsic value calculator, I have three intrinsic value calculators. One is Warren Buffett intrinsic value, Phil Town, and Peter Lynch's. Warren Buffett one uses the current and old book value per share plus dividends. Phil Town uses the earnings per share growth, future earnings per share growth, and Peter Lynch's intrinsic value is using growth plus dividend yield to calculate its value. For Peter Lynch's one, if the value is below 1, the stock is overvalued, between 1 and 1.5 fairly valued, anything over 1.5 it's undervalued or very undervalued. As we can see, according to Warren Buffett's intrinsic value calculation, the stock should be at $784, which is much higher than the current stock price of 496. Peter Lynch, Town's intrinsic value is 159, which is way below what the stock is currently is. And according to Peter Lynch's intrinsic value calculation, the stock is overvalued. If you look at the risk factors, one big thing is the succession. The new CEO will no doubt do an amazing job, but investor psychology still ties to Buffett Munger legacy. Size and growth is another risk for Berkshire Hathaway. The company is really big, and although it has big cash pile, it also makes it very difficult for it to deploy. As Warren Buffett said it many times, it's not that easy for them to buy company's equity or invest in any company. If we turn to the charts, we can see that the company has been in a long downtrend. It triggered my long 1, long 2, and long 3 back in 2023, May 2023. It met all the criteria and is been in an uptrend since. The company is currently trending sideways. It also in August 2025 met the criteria for exit, which I consider price closing below my below EMEA 55 condition that was met in August 2025. And since then, and way long before then, the stock was trading in a sideways move. Exceptional balance sheet, conservative leverage, very healthy fundamentals, definitely positive for this company. Valuation, multiple fair value frameworks gravitate around 500, 525 per share, so fairly priced at the moment. For me, from the technical perspective, I'll have to wait for long 1, long 2, long 3. From fundamental perspective, the company is not paying any dividend as yet, and as we can see, it's moving sideways, so I might consider building a position. Thanks for watching, and see you again soon.